FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
And you are listening to the Financial Survival Network, and it's Kerry Lutz, and we are with the mercenary geologist, Mickey Fulp. It is post-election day. We're not here to talk about elections. We are here to talk about more important matters, what the markets did in October last month in the run-up to the elections. And evidently the stock market, Mickey, knew something that we didn't know, right?
Well, we have what I would call creeping inflation of the major stock markets, up another 2 to 3% on the month. That's the Dow, S&P 500, and the NASDAQ is forging new ground. The previous two hit all-time highs once again. The small market index, the Russell 2000, actually gained back last month's losses at plus 6%. So in terms of markets, it was the best performer. Toronto Exchange has shown a couple of months' weakness after hitting its all-time high in August, but with commodity prices, which of course we'll talk about in a minute or two, down, that was to be expected. The real sad story, especially in my line of business, was Toronto Venture Exchange. It has simply capitulated, closed the month at 770. It is now approaching its all-time low, except if you factor out the November-December period during the global economic crisis when it reached a low of 684. But I'm not sure that we won't test that during upcoming tax loss season.
Yeah, right. Because Canada, you get the tax loss season because you can carry your profits
they can
carry your losses back.
Carry forward and back. They can carry back 3 years, but it would be my contention that most of those carrybacks have now expired or are close to expiring because the market is high in the first quarter of 2011. But with this capitulation, certainly there's going to be some tax loss selling coming forward in the next month or so. And finally, to wrap up the markets, our emerging market index was up 1%. It was a little stronger, and that can probably simply be attributed to the 2-month positive Chinese PMI. I think it was 52 for the month of October.
Right. Yep. So the markets, share markets, still the place to be, especially in the United States. And hey, then we get to currency, and it's still, everything is coming up dollars, right?
Oh, it certainly is. The dollar closed at nearly 87 on the index. I failed to go back on my charts and see how long it's been since that has happened that high, but it's quite some period of time. Concomitantly, the euro was down once again. It closed the month at $1.25. That's the lowest we've seen since July of 2012. The U.S. T-bonds, 10-year T-bond, completely gave back last month's gain at 7%, gave that back this month to close at a rate of 2.35%. Real sad story for the 1 month, once again, is the cryptocurrency aficionados have taken it in the shorts. The Bitcoin bubble has simply burst after a blow-up of 1 year ago. It's off 71% from its high of 11 months ago, closed the month at about 324. And I'm looking at that chart right now, and it is simply, I'm looking at a 2-year chart of Bitcoin, and it is the classic parabolic bubble.
Oh, yeah. It hit 1124. That was its closing price, 1125 back in...
that was 11 months ago.
Yeah.
Closed November of 2013. So...
all downhill since then.
It certainly is.
Right. Had, 1 or 2 up months, but it's basically the trend is like downhill. And I'm out about $50 on my Bitcoin that I bought. So, I'm a net loser.
I've never bought one. So, and at this point, the price is not low enough for me to wade into that shark infested water.
Yeah, well, hey, speaking about parabolic and unhappy outcomes, we get to our precious metals here, and we're not even talking about what's happened the first week of November. We're just concentrating on last month, and not a pretty picture.
Well, it certainly isn't. We've hit 4-year lows, and gold and silver, the bears and the shorts are completely in control right now. At the end of the month, which was Friday, Halloween, gold was down more than 4% over the month. Silver down 6.5%. Closed the month at 16. It's taken a tumble since then. Both those metals. Platinum hit a 5-year low. Closed the month at 1227. Palladium bucked the trend a little bit, and we would expect that with stronger economy and auto demand strong. It was up 1%. So it's stabilized. Looking at our ratios, I've talked before about my magic number for the gold-silver ratio when I will choose to buy silver instead of gold, and my magic number is plus 75 on that ratio, and it closed the month a little less than 73. So we're getting there. We again saw the platinum gold ratio fall. It closed the month at 1.05. Platinum palladium is in uncharted territory. That ratio at 1.57 at this point. And finally, in terms of metals, copper is flat despite a stronger U.S. dollar. We're doing correlation coefficients right now for the month, and I will come out with a piece sometime in the next few days on the correlation between stronger gold price and weaker commodity prices, and it's quite astounding. Those negative correlation coefficients, but the one that's really bucked that change over the last couple of months, or especially this month, is copper. It's stabilized, closed the month at 307. So, demand for copper remains strong. China a little stronger. U.S. economy improving. It looks more like Dr. Copper at this point.
Hmm. Yeah. Well, hey, we'll see what happens the end of November. But man, off to a horrible start for all those metals for sure.
Just buying opportunities, Kerry.
Yeah, I know.
There's some talk that gold could go as low as 1,000, but smart buyers who accumulate precious metals, I would submit that it's a good time to buy right now. You probably don't want to go all in right now with however much you may eventually target in the short term to buy, but picking away at it's probably not a bad idea at this point.
Yeah. Hey, averaging down, it's a good strategy. And look at the global economy. Nothing's been solved. Debt continues to accumulate at all levels of society at geometric rates. And there is no solution for the debt. So if it's a deflationary outcome, then gold's purchasing power, precious metals purchasing power increases. And if it's an inflationary one, which we don't want to think about, then it's the only thing that has purchasing power. So either way, it has to be the place to be.
Well, I agree. I think gold, I'm one of these people that think gold is always in a win-win situation.
Yeah, for sure. And speaking of win-win, well, we go to our energy sector. Energy, man, like, geez. And
this is just astounding.
Yeah, it's not a sign of a healthy world economy, It just isn't.
It isn't. Both oils dropped precipitously again this month. Even more so, I should say, double-digit losses in terms of percent. WTI down 12% over the month. It closed just below $80 a barrel. Brent was down 10.5% over the month, closed a little less than $85 a barrel. We have not seen these sort of prices for quite some time. The real concern here, Kerry, well, there's a couple of concerns. U.S. demand is down, yet production continues to increase, and that's part of the problem. We need this export ban on petroleum lifted. Hopefully, with the spanking that the Demos got in this election, Obama will wise up and we'll get some easing of this export ban. There's some ways people are getting around it. I saw a tanker had left for South Korea last week full of U.S. oil. That must be condensate or natural gas liquids. But here's the real concern that I have, and I think we're going to see this very quickly. We track on a monthly basis U.S. oil drilling rigs and U.S. gas rigs. Drilling will absolutely dry up at less than $80 a barrel on these shale oil plays because the netback goes to essentially zero. And, U.S. production in July, another record at 8.5 million barrels a day. That's plus 60% increase in U.S. production in only 3 years. So we need some place for our oil to go, and there's still good world demand, and we need to be able to export oil.
Hey, and you remember when that ban came into existence, don't you?
Yeah, in the 70s during the oil crisis, and it was an attempt to keep U.S. production in the U.S. Yeah. But that is what... The first oil crisis was 40 years ago, 1973, so 40 plus years ago. Mm-hmm. The second oil crisis was during the Iran hostage affair in the late 70s, so 79, 80, and these are regulations that have long outlived their lives, and we've got to be able to export crude oil. Number one, we've got all these refineries in the Gulf Coast that can't process light crude. They can only process heavy crude, and shale oil is light crude, and we need a market for our oil.
And specifically, that ban was aimed because we were exporting oil from Alaska, from the Alaska pipeline, to Japan and Correct. To the Far East. Yep. And a bunch of our legislators in their finite wisdom got their panties in a bunch and they banned exports. And oil is fungible.
Seem to do.
Because what difference does it make if you export 1 billion barrels from the West Coast and you import a million rather to the East Coast? Your production's still the same. I mean, there is no difference there.
Yeah.
I mean, it's just a balancing for the refineries. And like you said, the U.S. refineries, a lot of them are set up for heavy sour, not light sweet. Yep. And that's a story in and of itself, which they're going to have to change that at some point or figure something out, because more and more, shale oil is going to be coming on there, whether they like it or not. And that brings us to our next commodity, which is nat gas, Henry Hub.
Yeah, Henry Hub was down 2% of the month, closed the month to $4.03. So we would expect Henry Hub gas to go up over the next couple of months as winter approaches. It's been essentially in that $4 range for how long now?
A year.
Basically over the last year or so. A little less than a year, 11 months. It's been somewhat range bound, but we would expect stronger nat gas prices over the next couple of months. We'll see. And get this, our big winner for the month, once again in the commodity sector, is uranium. Close the month at, 36.25. My daily showed that it actually put on another 50 cents here over the last couple of days. So continues to creep up, but still way below the price that's needed for U.S. domestic producers to prosper unless they have offtake contracts. So, we would hope that on the short term, we'll hit a $40 uranium price, spot price, and then at some point the Japanese will start some reactors. Who knows when that will be, but that will be a boost for that market too.
Yep, no doubt. That's what we can look forward to there. And you'd been calling it for a while, and finally caught up with you.
Well, we're catching up on uranium, so we've still got a long ways to go.
Yep, that we do. And hey, well, we will see what happens for next month. I don't know how much further precious metals can go down here. I mean, I didn't think it would go down this low, honestly, but at some point the cycle will run its course and reality will prevail because, like we said, world economy, house of cards, U.S. economy, house of cards, the euro, a joke, and final analysis, when people really get scared, where are they going to go, Mickey?
Well, they're going to go to gold and or the U.S. dollar, and right now it's just the U.S. dollar. So
and the stock market.
Yeah, well, that's true too. But in terms of monies, still, and it's been this way for quite some time, there's two stores of value in the world. Gold is money, and the U.S. dollar is still the world's reserve currency. So that's where both those things are where people flee. At this point, U.S. dollar has the upper hand, but that, once again, just gives us an opportunity to buy physical gold.
Yeah, and we're not stop clock people here. I think that's really important to know. We don't just say buy gold, buy gold, buy gold because we're in love with the way that it looks and all that. There's some major reasons to be doing it, and history is not the least of them. And really got to go back and look at history of monetary systems and understand that the chaos that the world is going through now is in large measure due to the unreliability of fiat-based currency systems. And this one is really a house of cards. And you're seeing it with the euro. Dollar is going to see its day too.
Well, certainly. And we'll go back right to the golden rule. He who owns the gold makes the rules. So keep that in mind.
You got it.
Next one.
All right. And hey, we'll keep our eye on it. It's just a matter of time. And the beauty is when you own the physical, you put it away someplace safe. And the only time you look at it is when you add to it and you don't think about it because it's just there. And that's it. All right, Mickey. Hey, tell us, we obviously mercenarygeologist.com. Other sites we find you?
At Mercenary Geo is the Twitter feed. We're up to almost 39,000 followers now. Continue to increase that on a monthly basis. Mercenarygeologist.fm. This interview will go into that rotation. And for my subscribers and casual followers, I would encourage you to check back in. We will be posting what I think is going to be a compelling argument for the sole reason for decline in precious metal prices, which is strength of the U.S. dollar. We're going to do a bunch of college statistics stuff, and we should have that out within the next week or so.
All right. Make sure you send us a link. We will have it up on the site. We've just got so much on Financial Survival Network now. I mean, over 100 articles a week, and you really got to take a look at it. Everything you need to know about what's really happening with the world financial system is on there. Try not to get too much into politics because our belief is the economics really are what determine the politics. And if you don't believe it, just look what happened yesterday. All about economics.
It's all about the economy, stupid.
Yeah, right?
Clinton said.
Yeah, and it's just further proof. So financialsurvivalnetwork.com, subscribe to our newsletter, subscribe to Mickey's, and be on the lookout for his report. We'll definitely have a link to it when it comes out. And yeah, strong dollar, can't be good for precious metals. And strong dollar tells you that there's a lot of trouble in the world in places that you didn't think possible, right?
Well, there are lots of things going on in the world right now, and it makes for interesting times.
Oh, yes. Interesting, and you just need to survive. So, all right, Mickey, we'll talk to you next week. Be well.
All right. Thanks a lot, Kerry.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.